Welcome to today's market report.
AMC Entertainment continues to post staggering stock gains. However, crude oil and Wall Street have posted recent positive runs ahead of a data deluge headed by US jobless claims numbers. Meanwhile, the electric car market has received a celebrity backer. There appears to be no stopping AMC Entertainment, the stock of the movie theatre chain. The new darling of the Reddit community is pointing firmly higher again pre-market Thursday after doubling in value during Wednesday's session and surging more than 400% in the last 2 weeks alone. Its market capitalization has soared to $33 billion during this period, surpassing other so-called meme stocks. Not bad for a company that was on the brink of bankruptcy at the start of the year. However, heading out treats like popcorn and special screens hasn't changed the economic reality surrounding the company. The pandemic has caused its long-term debt levels to soar to $5.4 billion as of the first 3 months of this year, from less than $2 billion in 2016. And it's still losing money, with analysts expecting another $100 million to go over the next 12 months. Sure, customers may well come back as the US fully reopens, and its new AMC Investor Connect initiative may help on the margin, but there's good reason to think the pandemic has permanently changed viewing habits. The media giants spending vast sums on buying streaming services certainly think so. AMC's stunning climb has certainly rewarded investors who bought in earlier. US stocks are set to open marginally lower on Thursday, continuing the muted start to the new month ahead of a deluge of important economic data. Dow Jones futures were down 60 points at just over 34,500. S&P 500 were down 0.2%, and Nasdaq 100 futures dropped 0.2%. The major indices closed marginally higher on Wednesday, with the broad-based S&P 500 up just 0.1%. The blue-chip Dow Jones Industrial Average gaining just 25 points, and the tech-heavy Nasdaq Composite adding 0.1%, maintaining the week's holding pattern ahead of Friday's crucial jobs report. These averages remain close to record highs, but the market has lost a lot of its earlier momentum amid worries that a stronger than expected economic rebound will result in higher inflation and thus sooner than expected monetary policy tightening. Crude oil prices edged lower on Thursday, with traders banking some gains, with the market earlier climbing to record levels amid growing optimism of a strong recovery in demand from China, the US, and Europe. US crude was down 0.2% at $68.69 per barrel after earlier climbing to its highest level since October 2018. Brent was down 0.2% at $71.22 per barrel after closing above $70 for 2 consecutive days for the first time in more than 2 years. The gold futures was down 1.94% at $1,872.85 per ounce. On the FX front, pound edged lower against the dollar and fell to its lowest against the euro since 10th of May, as a lack of positive drivers for the British currency put the focus elsewhere for currency traders. The pound's performance this year had been second only to the commodity-driven Canadian dollar among G10 currencies, buoyed by Britain's fast rollout of vaccines that sparked hopes of its economy reopening. British policymakers on Monday adopted a relaxed tone about inflation, helping the pound to hold recent gains, while Bank of England Governor Andrew Bailey said on Monday he did not see long-term implications from an expected pickup in inflation. The GBP-USD pair traded at around 140.85, not far from the daily low at 140.91. German consumers held tightly on the purse strings in April as retail sales fell by 5.5% month-on-month. This slide was much worse than the estimate of 2% and was a sharp downturn from the previous read of 7.7%. Pair is losing 0.13% at 121.92. Dollar index was up 0.14% to 90.023. Dollar Chinese yuan edged up 0.12% to 6.3882. Dollar yen was up to 109.78. Aussie dollar was down to 0.77.
This is today's market news. Thanks for listening. We'll see you next time.